Hello and welcome to the Gold Goats and Guns podcast for October 10th, 2023. My name is Tom Luongo and we have a lot to talk about. It is episode 156 and I can tell you that I've been waiting for this one for a long time. Caitlin and I scheduled this a little over a month ago, I believe, and I've been waiting for this one for a while. It was the last time she and I spoke. It was a hot time in the old town. It was a great get to know you. I really enjoyed that. And it was, by the way, for your edification, Caitlin, I think the best received episode of the podcast.
Oh, wow. Thank you.
Without a doubt, from traffic perspective and everything. So Caitlin Long is with me today for round two of our ongoing long-term discussion. Caitlin, welcome to the show.
Thank you. Long and Luongo. Back for round two.
Back for round two. How are you today? Let's just start that part.
I'm having a blast.
Are you?
I'm having so much fun. Yes, absolutely.
Well, I would imagine that your mood is slightly better than the last time we spoke, because between now and then you got your full banking license from the state of Wyoming on Custodia Bank, if I understand that correctly.
Yeah, we launched the bank. We took our first deposit in July. We are going slowly to make sure that everything works. You don't get to beta test a bank. You're either live or you're not. And so we're the way we effectively beta test is we walk before we run. But we are live with US dollar deposits, wires, and money market funds. And I hope imminently Bitcoin custody in a way that's not available to the market right now, which is that we will actually custody the customer's UTXOs in a segregated account structure. Everybody else is using, to my knowledge, an omnibus account structure, and we can go into the difference between those two. But we built a custodian for crypto by somebody who firmly believes in the not your keys, not your coins vision. And that may seem like a contradiction, but we can talk about why it's not as well.
I'd love to. I don't know a lot about. I know that this has been a long-term fight for you, and I know that I've been and I've been very sympathetic to, like, cool, get this done. I wanted to see it done. Please explain to people what makes Custodia different. Let's just start there, because we're going to go all over the place for the rest of the show. But I want to get this stuff out of the. I want to get the nitty-gritty out of the way for you early, because I think that's just fair.
Well, the business is that we are committed to the lawful actors in digital assets and supporting the US dollar access to these lawful businesses. Right. There has been no doubt a clear Operation Choke Point 2.0. That was a phrase I'll credit Nick Carter for inventing. He was acknowledging what we knew was happening since before we were even denied by the Fed, which is that there was a coordinated crackdown coming out of Washington, D.C. Back then, I didn't share much because we didn't fully understand what was happening, but we subsequently had insiders come to us and tell us, and it's all making sense. And now it's not even a secret anymore. But long story short, we survived. We had a bazooka shot at us, and a lot of our competitors have fallen by the wayside. Right, some of the banks are gone. Some of the custodians that were not paying attention to internal controls are also gone. And those that were running these leveraged rehypothecation-based businesses, and those that were running sheer frauds, some may argue those are redundant terms, they're gone as well. So there's a very different playing field ready for the next bull market in Bitcoin. And if past is prologue, about 6 months or so after the next halvening, which is in April, we'll be in another bull market. And Custodia is live and ready to scale into that. And we're still pursuing our account at the Fed. We are using partner banks in the meantime, but we are still pursuing our account at the Fed through the legal system.
Cool. So, and this is the goal here, if I remember correctly, and again, correct me if I'm wrong. I'm happy to be disabused of any notions that I don't that are not correct, which is that the real goal here is to legitimize holding Bitcoin from an investment for large players, if they want to hold Bitcoin as an investment asset in a trusted environment. That's the correct, right?
Absolutely. That's a big part of it. So serving the registered investment advisors market, serving businesses like corporate treasurers of small, medium, and large businesses to hold Bitcoin, and eventually to use the Lightning Network to move money around the world. But also, a very big component of this was to make sure that the traditional US dollar banks do not debank this industry. I got to give credit to Lynn Alden when she talked about the attack vectors on Bitcoin. The number one attack vector that she listed is something that I've been agreeing with as being the most important one. And so has Ryan Selkis at Masari for years, which is it's the on-off ramps between fiat currency and Bitcoin. It's not banning Bitcoin, which we all acknowledge wouldn't work. It's shutting off the on-off ramps. And there are certainly many in Washington, D.C. who wanted to kill crypto and who I'm laughing, thought that they would be able to. And now that they didn't succeed, they certainly wounded the industry. And frankly, thank you, got rid of a bunch of the cruft and criminals and grifters and highly leveraged business models that had no business surviving. Okay. And markets would have gotten them eventually if regulators didn't get them first. But long story short, we've got a much cleaner industry. It is not completely clean. I suppose it never will be. It's human nature that there will be grifters that show up in these kinds of new technologies. I'm very glad that many of them have moved on to AI, and crypto is now boring. And I love that because we've been through this a few times, and I love crypto winters. This is when the real work gets done.
Yeah, no, I agree. And from my perspective, I haven't really been following crypto very closely because to me, I don't really, I have to chase what I think is the big geopolitical story first.
Yeah.
Right. Yeah. And so this is part of the reason why I wanted to have you on today, because, just to eloquently explain what's really going on, which I think is exactly what you just did, because it's when I observed this, I always thought that that's what was going on in 2018 and 2019. I kept watching it, sitting there going, oh, look, we're just going to build this massive, massive base, and then we're going to break out of it, and then it's going to be crazy. And that's what, and then the question then, of course, is, was it helped along in order to try and destroy it? And there's all sorts of weird stuff that was happening because we were still at the zero bound. And so there was a whole lot of funny money happening. And I've been...
Gimme checks went into crypto for sure.
Oh God. I mean, when I just start thinking about things like FTX and all the other things, and clearly that, this is the way my partner Dexter White and I came down. It was clearly a Ponzi Hoover for all of to hoover up all the cash and hand them magic beans and steal all the money. That's what it was, while also being a money laundering operation for Ukraine and the DNC and all these other things. And as far as I'm
Republicans too, mostly DNC, but it was
there was Republicans in there, of course. But when I use the word DNC, I almost mean at this point it's basically
the Uniparty.
Yeah, the Uniparty. Okay. Because it's dominated by the DNC, and then the rhinos do a nice job of saying, well, it's not really us, but then they vote all this stuff anyway. So
I get you.
And then when you stop to think about it, who had the incentive to get rid of FTX, which I think is what you and I talked about back in was it March or April when we first spoke, and I thought that it always made sense to me that the Fed was actually the one that probably, through its agents, is what executed FTX. And I think they did so on purpose, and they did it on election night. So the timing was kind of like, oh, by the way, no, really,
that's interesting.
You steal 20 House seats that you didn't deserve, and now we're like, no, we're going to stop this. I'm
so interested in your view of this, because I remember when we talked about it. Again, I'm not endorsing your views, but one of the things I like to listen and talk to you for is that you make me think. And I really do appreciate curious people who push the envelope, who are out of the box thinkers, who make me think. And you are one of those. So I do pay attention to you, even if I don't agree. So I don't have evidence that that's what happened. But there is plenty of evidence that the Fed did the White House's bidding, to be blunt. There was a lot, I've talked about this on other podcasts, the insiders, we had an insider come forward the weekend after the Fed voted us down. And keep in mind, they had leaked to the press 2 days before that we were going to be voted down, right? Supposedly these votes of the Federal Reserve Board of Governors are independent, right? But we got a message from the press, you're going to be voted down. We actually have it in email that multiple of the applicants for banking charters or master accounts at the Fed and the OCC were simultaneously asked to withdraw their applications. Okay. And the date of that email we had a lot of conversations before
Sure.
that, but the date of that email, that's the one for which we have the hard evidence, was the day before the Fed voted us down. Okay. So, I mean, there was a lot of shenanigans going
Again,
on.
I will never make. I feel dirty many a day having to explain that in certain sectors of the geopolitical landscape, the Fed's the good guy. Like it makes I have to go shower and people
But that's so
forget
unusual.
this.
Yeah.
But
Yeah.
because I have to make because it's so hard to make the Fed's case in this
Yeah.
environment, especially in the intellectual circles we run in. Like it's the Fed is just the thing, right? The mindset. But there comes a point where you always have to be willing to engage the motivations of the people on all sides of the. I mean, when you're sitting there at a table with 6 people, I do this every week. Tomorrow night, I'll go to my board gaming group and I'll do this. I'll have 6 people sitting around the table, like all vying to try and win. When you look at their motivations, like in those scenarios, they're pretty obvious what they're trying to do. If you look at the game board that way, all of a sudden you're like, he's not evil. He's just somebody else at the table.
Yeah.
And then you have to start thinking about how is he going to win this particular thing, and then make the cui bono argument for them, make the incentive argument for them. You don't have to endorse it, just to make the argument for it. And this is the hard part that a lot of people have, is just being able to separate out your personal feelings on this situation from the dispassionate view of the game board. And those are different things.
Well, you make that point about Jay Powell all the time. Now, Jay Powell, of course, voted against Custodia. Mm-hmm. So, and then the interesting question then becomes, okay, why, given what we were told and for what we have partial evidence for and what we have a number of people who have confirmed, and again, it's no longer even a secret. Mike Novogratz, who's a big Democratic donor, is out there talking about how Elizabeth Warren has control over financial services policy in the Biden administration. Period. Full stop.
Period.
Okay.
Full stop.
That is what I figured out back in January. And her acolyte at the White House is the person who was behind it. I've never met the guy. I have no idea how we came on his radar screen. I have no idea how Dick Durbin attacked us on the Senate floor the next day. Okay. This was clearly all coordinated.
Right.
Okay.
Right,
I've never met him. We're not, at that time, we weren't even an operating bank. Okay. Right. So now put all of that together. Why did Jay Powell vote against us? Why do you think Jay Powell voted against us?
I don't, this is a weird thing for me, because part of me wants to believe, okay, well, the Warren angle on this is easy. The people who are most against Bitcoin in every way, manner, shape, and form are the European Union. Like they make no bones about how much they fucking hate Bitcoin. Like Christine Lagarde talks about it as it's an escape route that people will use and we have to shut it down. Like, oh my God, people might want to eat steak as opposed to broccoli. Like this is the way, this is the way she thinks.
Yeah.
Powell.
He doesn't say that.
He doesn't say that. And I don't think he cares much about Bitcoin, but then I don't have a good answer for you about why he would be against a properly
law-abiding
commission
for
actually, bank that designed to custody Bitcoin, when Bitcoin has the potential for the Fed to be a reserve asset for the repo markets that they need, right? And so unless they're worried that they're going to do that themselves and they just want to have control over that angle of the Bitcoin market, which is possible, and that would be the only argument I could make. I don't particularly think it's a great argument. Why not let the why not let the private sector do that and the Fed and regulate it properly? I don't know. Well,
so a couple of pieces to add to the puzzle facts. Jay Powell met with Sam Bankman-Fried for 1 hour on February 1st, 2022. What they talk about. Hey, I asked for time with Jay Powell and never got it, right? And I was an applicant. Jay Powell has met with 2 people from the crypto industry that I'm aware of, Sam Bankman-Fried and Jeremy Allaire. Sam Bankman-Fried got something very rare, which is a full hour. Okay, Larry Fink also met with Jay Powell that month. Larry Fink, the head of BlackRock, and he got 15 minutes. Okay, so when you look at the CEOs who talk to Jay Powell, they typically get 15 minutes. Okay. It is hard. And go look at who Jay Powell's schedule is publicly available.
Right.
You can see who he talks to. Okay. And it is the big bank CEOs for the most part. And Sam Bankman-Fried. So now you go tell me how that fits into your theory.
I don't have an answer for that. I really don't. It's something I didn't know, and I'll be happy to continue to think about. That's February of 2022.
February 1st, 2022. It's on.
Before he was reconfirmed as Fed chair.
Yes. What was the timing? When was the vote?
No, he wasn't reconfirmed until later that month.
Aha. Okay. Well, the other aha is that that Alameda, which was the trading arm of FTX, took a control stake in Moonstone Bank 6 weeks later. And that has since been shut down by the Fed.
Yeah, I read that. Right. I read a great story about that the other day. It was used to be Farmington Bank,
Farmington.
Bank, right? Farmington Bank in Washington.
Right.
Again. Yeah, no.
And the Fed did not catch that as a control. If you look at the Fed's control rules, Alameda purchased 80% of the equity of the company. That's supposed to trigger the Fed's control rules.
Right.
And it didn't. Why?
It's a good question, but I'll tell you, but my spidey sense says that would have gone through the San Francisco Fed and Mary Daly,
for sure.
and Mary Daly, who is, in my mind, is as Davos as Janet Yellen. Turned a blind eye to it. That's what she does. I think there's a war between the San Francisco and New York Feds. I think the San Francisco Fed took a shot at the New York Fed and failed. I believe that sincerely.
How? See, I'm interested in hearing your views on
because all of these San Francisco crypto banks, the ones that failed, most of them could be also thought of
San Francisco Fed. Yeah.
As big offshore oligarch banks, that they were basically onshore shadow banks doing deals at 50-year loans against Mark Zuckerberg's equity positions in Facebook at 1% and whatnot. And
you mean Silicon Valley Bank?
Silicon Valley Bank, and even I ran this by Chris Sullivan the other day, and he was on the podcast, and he knows some of the people who ran a couple of the banks that were in question. And all of the four of the banks that failed in March were all San Francisco Fed regulated banks that were involved in stuff that was, well, let's just put it mildly, hinky. And they all wound up getting bought by New York Fed regulated banks.
Okay, the latter is true. Signature was a New York bank, though. And that was an FDIC regulated bank.
That is true. Right. Okay.
Yeah. But you're talking about Silicon Valley Bank.
The other three were
Silvergate, which voluntarily liquidated. It didn't technically fail. Right. And then First Republic was taken over.
First Republic was taken over by.
And that was San Francisco. Yeah.
Right. Yeah. So I think that there's an angle here. Again, this is all inferential. I'm just doing my best to I see these things happen, and I go, well, it's clearly while Yellen was at the San Francisco Fed, Silicon Valley became Silicon Valley. Right.
Okay.
And and then again, let's not forget also that the military industrial complex is mostly regulated by the San Francisco Fed as well, because they're all in because most of them are headquartered in California. So I'm just there's something going on here, and I don't know what it is. And to me, it seems worthy of inquiry as to what's happening, because there's something going on within the Federal Reserve that we haven't seen in a long, long time, which is the Fed is actually doing what it's supposed to do vis-a-vis interest rates for the domestic economy, which is raise the cost of capital and ignore what the rest of the world wants. Because the rest of the world is the one screaming that we should have pivoted and never raised interest rates this far, this fast, and why and where all the money offshore, all the offshore money came back to the United States. That's why the dollar is in a bull run, and all the rest of it.
And I got to give you credit, because you were right about that when everybody else was saying no, right? And look at what the futures market was saying, right? Mm-hmm. It was showing that the Fed was going to be cutting, and that Fed cutting date, it keeps getting pushed out and out and out as the Fed keeps raising. Yeah,
right. One of the interesting things is I brought all these ideas up, and I said I expect the long end of the yield curve to start to rise as the 2-10 spread is 110 basis points. It can't. The inversion was 110
that was
basis
unsustainable.
Points. How could it stay that way?
And it's down to 40 basis points today. Yeah.
Was it 40 today? Well, it was 29 on Friday. Okay, it closed at 29 basis points on Friday. Negative the inversion, not
Right. Yeah.
so.
Yeah. It's been incredibly volatile, right? Today is an unusual day, right? I think the 30 years down 20 basis points
Yeah,
today.
today is insane.
Yeah.
The
Yeah.
way we're doing this is
Yeah.
the first full day after Hamas attacks Israel, and clearly there's now a flight to quality into the wrong
Correct.
end of the U.S.
Of the
yield curve,
yield
which
curve. Yeah.
is bailing out
Yeah.
Europe because the German 10-year hit 3% and everybody panicked.
Yeah. Yeah, well,
Okay.
that was indeed the case, and I was worried that we were just going to have. I mean, you and I've talked about this before. One of the things that I've been worried about for since the 2008 financial crisis, when I started to realize just how unstable the whole thing is, that there's going to be an unwieldy unwind of some of this,
Yes.
and we've come so close so many times,
Yeah.
and some event has caused it to come back from the brink, and eventually that won't be the case. But for now, it does appear that it's come back from the brink again, right?
Right. We just came back from the brink. One of the interesting things, Caitlin, is that for the October newsletter, or for the September newsletter, I wrote the opening article was called "Beware the Kalends of October," which the Kalends is the first of the month in the Roman calendar. We all know the Ides and the Nones.
Yes.
Being classically trained, the Ides, the Nones, and the Kalends. Sorry.
Got
and I said, I really do think that the first trading day of Q4 is going to see the return of the bond vigilantes. Now, all of a sudden, everybody's talking about the return of the bond vigilantes because of what's going on. I thought just all the things that were happening, and then the way the quarter closed across all the strategic markets, they were all big reversal signals, either bearish or bullish.
Yes,
and
true.
From a quarterly perspective, right? So quarterly reversal signals were thrown by the US dollar, oil, the euro, the German Bund, the 10-year bond, like everything. And I went, there we are. There's our moment. Now, will there be a correctional rally? Will there be a response to this at some point, right? Somebody has to make the move's been made. Now someone has to make a counter move. And what's the counter move? Was the counter move somebody decided to? I mean, I don't want to put this in the queue this way because I'm not sure about what it is, how to think about Hamas's attack on Israel. Okay, I have multiple scenarios in my head that are potential here, but one of them could easily be that, like, look, they knew Hamas was going to attack. And we saw and Iran saw the opportunity to tell Hamas to go attack because we don't have a Speaker of the House right now.
Right.
And Netanyahu said, well, the best way for us to get what we need, and the best way we can get the United States to stop the American people to give up on war fatigue, because clearly now we don't want to fund Project Ukraine, is to create a moment like this. Another, I hate to put it these terms, but a USS Liberty or Pearl Harbor style event. And how has it been framed? Right? It's been framed as one of those things. And then, of course, what would be the response in the bond market? Well, a 20 basis point move today into the long end of the bond.
Yeah. Yeah.
Long end of the curve.
Yeah. Right. Flight to quality, so to speak. Right. Mm-hmm. Yeah. Yeah. But what does that do to the dollar? And what does that do to commodity prices?
In the short term, well, it'll be, they in the short term, well, commodity prices were clearly whacked the weekend before the 3 days before the attack.
Which was interesting because oil was above 90.
Somebody knew it was coming. So you reset oil prices so that when they start to go higher, they have to go through some slog. Right, there's a lot of resistance on the Brent crude chart.
That's interesting.
At $87.
Yeah.
So push it down below 87. Get people on the wrong side of the trade, but you're still, and the same thing with the Dow. They moved the Dow right to the bottom of the trading range, and the Dow is lifted off of those lows as well. So I don't know. It's a very interesting moment.
Again, we don't know.
Right.
We're in the fog of war.
We'll know in about 3 weeks. I think we'll know. We'll start looking for weekly. We'll start seeing if we get like snapback rallies in gold, silver. Oil is not going to throw any kind of weekly reversal signal for in a way, because the last week was so massive. Like oil would have to go to $94 by the
Yeah,
end of next week to throw, in my
yeah.
mind, to throw a reversal
A
signal.
lot of these markets ran through stops, to your
Mm-hmm.
point,
Mm-hmm.
right?
Yes.
And so, yeah, a lot of the directional move had been taken out of them.
But
Yeah.
what's interesting is that Bitcoin didn't respond.
Yeah. Okay. So let's talk about that
Yeah, no,
because
that no, yeah, I want that's your cue, dear. Do it.
okay. Well, I'm on the record many times as saying price is the least interesting aspect of Bitcoin, and some of the biggest Bitcoiners disagree with me on that because the Americans and the Westerners who use Bitcoin are using it for the speculative value, whereas folks in Nigeria or El Salvador are using it as currency. Okay. And it is true that different people have different views of Bitcoin, different uses of Bitcoin, and that those evolve over time. I used Bitcoin as a payment instrument in 2014 to buy my Christmas presents. Okay. But I don't use it as a payment instrument anymore because it's evolved to become a large value payment platform. And Lightning Network is now the small value payment platform. But so let's set that aside. One of the things that I think is interesting about Bitcoin relative to the rest of crypto is that it's on a different path. And I'm not talking about the price. I'm talking about the investment in the infrastructure, and I'm talking about the regulatory environment. Clearly, it is not a security. Gary Gensler himself has said so. Okay. He has thrown shade on everything else, even including Ethereum, as to whether it's a security, but they're leaving Bitcoin alone. And I think they know that, heck, if they can't even get XRP to be declared a security by a court, right? There's no way they're going to get Bitcoin declared a security by a court. So they've made the decision to leave it alone. And that has brought in, the BlackRocks of the world, which gets us back to the whole, where's the power structure in the financial markets in the United States vis-a-vis BlackRock getting its ETF through? Because BlackRock sees what's coming. And I don't have a lot of view as to why Bitcoin didn't move much when other markets were moving a lot in the last couple of weeks, including after the events in Israel over the weekend. But one thing I do know is that the halvening is coming in April. That's locked and loaded. And the bull market, if past its prologue, is going to repeat right into the presidential election timing. Okay. And so I think you and I would both agree this 2024 US presidential election is going to be just crazy and volatile and unpredictable. Mm-hmm. And Bitcoin's going to be rallying right into the face of that. Yep. Pick it up. What do you think?
Well, it's funny. Well, what's funny is that I was not surprised that Bitcoin didn't respond to any of this.
Okay. Why?
Because I don't think the bulls want to take it higher, and I don't think the bears want to take it lower. I think the governments are I just don't think there's any liquidity. Like, you know what I mean?
Just this morning I tweeted 94.8% of Bitcoins didn't move in the last month.
Right, exactly. Okay? Right. And if there's no liquidity on the exchanges, then they can't use futures to wag the dog. Right. So,
well, that's always been why Bitcoin's going to be a more pure market than other commodities.
Yeah, I agreed. Right. And by the way, the same thing is going to happen to gold. Okay. Gold.
Why? Because you think there's going to be a massive margin call?
Gold is going to stop moving across borders. And the COMEX is going to, the COMEX price of gold is going to go away. Vince Lanci and I did a podcast a couple of weeks ago. You might be interested in listening to about our entire argument as to what we think is happening. That the rise, Vince's argument, and it's a very powerful one, is that mercantilism is happening. That we're going back to we're going back to regional prices for gold, in that respect, because the gold you can trade gold. You can't take it out. You can own gold, but you can't take it out of the country at scale. Like, so we'll be able to buy. So you and me will be able to go to AppMex or our local coin dealer, and we will be able to buy U.S. Eagles, and that'll be fine. But there will be the Reserve Bank of India through proxies buying 200 tons off the COMEX anymore. Okay. If they want that, they're going to have to do it. They're going to have to get the tonnage in other ways. The Chinese have always set up the Shanghai exchange is always been a purely physically settled exchange. And if you want to get your profits out,
Yeah.
Right. If you want to get your profits out of China, you can get them out in dollars or whatever currency you want through Hong Kong. So you can set up a three-way trade, like oil traders in Shanghai set up a three-way trade between oil futures, the Shanghai gold contract, and the Hong Kong gold
I see.
contract settled in dollars in order to get their money in and out of China. But they can't take gold out of the country. Well,
Okay.
the COMEX is being drained. And this is a story
Right.
for Bitcoiners,
Yes.
by the way. The COMEX is being
Yes.
drained for both gold and
Yes.
silver. And JP Morgan is now the sole custodian for both GLD and SLV. And GLD and SLV are not, they, you and I can't go to GLD or SLV and ask for gold.
And physically redeem. Yes.
Right.
Understood.
JP Morgan can, or other major banks can, or other trusted partners of the government can, but no one else can. And so think about it that way. We're not going to explicitly put capital controls on because we're not quote unquote communist, right? We're not authoritarians. We're free marketeers, but we're just going to do away with the gold futures contract. And the other thing to say about this is that when you really stop to think about it, there was never any need for the gold futures contract in the first place because it was always because gold is interest, as Vince put it eloquently. The future price of gold is interest rates. Simply put, it's just interest rates. Like if you need gold, you don't have gold now. You want it. If you owed me money and you want to pay me in gold, and you say, Tom, I don't have it now, and I say, okay, well, give me 5% more in a year, and we'll call it good. And then there's no need to go to a futures market to coordinate price and time and quantity like there is in. Interestingly enough, Caitlin, we have gold futures in the United States.
Yes.
We have Bitcoin futures in the United States, but we don't have a functioning coal futures market in the United States. And coal is like necessary for everything. It makes no sense whatsoever, but they destroyed the coal.
That's a good point. I never thought about that. Why? Why don't we have a coal futures market?
I don't know, but it's because they probably so thoroughly destroyed the coal market originally that the coal consumers just went directly to the producers and buy it directly from them, which is exactly what's beginning to happen in gold and silver worldwide. That the producers are that the consumers are going directly to the exchanges or to the producers and bypassing the exchanges and just buying whatever they need and coordinating with them. What did I see? First Majestic Silver, which is one of the first miners to print their own rounds, just said I just saw this morning, is now like fully doing. We're now fully open for people to buy directly from us at scale. Interesting.
Wow.
Yeah.
Yeah.
Yeah. Exactly. And
just cut out the.
Think about somebody and just think about a miner in say Mexico, producing, a bunch of silver like Endeavor Silver, for example, or any of the ones in Mexico, and they're just going to sell it directly into the market, and they'll even sell doré into the market because why even refine this stuff when you can sell the doré, directly to the consumer, and then he'll go and refine it and do whatever he's going to do with it.
So you think that the futures contract will just die for lack of interest? Okay, but
I think it's also policy. I think it's a strategic policy to not let the gold leave now. They want the gold and the silver to stay domestic because we're eventually going to have to. We're going to have to put gold back into the monetary system. Gold is going to wind up being back into the monetary system, and I think Bitcoin is going to wind up being part of the monetary system as well. But the Fed wants it done on their terms and on their timeline. That's what I think.
Very interesting.
How else do we get out of the fiscal bind that we're in, if not to throw gold out onto the yield curve, and allow the price of both assets to rise.
I'm listening to the people who are talking, i.e. the Fed governors. They're not talking about any of this. Okay, to be clear. And but who's pulling the puppet strings then?
I think that it's like this. You don't talk about what you actually want to do until you're ready to do it. We're not ready to do it yet because we don't have we need a political revolution in the United States that would allow for fiscal reform first. You've got, everything has to happen in a particular series of events. Like in order for Jay Powell to raise interest rates, right, in 2022, he had to first start tightening in 2021 and signal to Congress that that's what's coming next. And and then stop, build back better, get Powell reconfirmed, and all of the rest of that. That had to happen first before Powell could start raising rates. But he did tighten world liquidity by $2 trillion in 3 months when he raised the reverse repo rate 5 basis points above the Fed funds rate.
Yep.
That happened. That's a fact. The euro got shellacked, went from $1.22 to $1.15 in 3 months, and European bond yields started to rise. Like, it was happening. And the Lagarde started complaining then. And then once Powell was reconfirmed, then he could start going on the rate hike cycle because he was now politically free.
Right. He did not. It is a fact. He did not start hiking rates until after he was reconfirmed. Correct.
And he wanted
what I'm alluding to.
But he couldn't.
Go ahead.
But all I said was he wanted to, but he couldn't. Right. And and he was given the transitory inflation. Danielle DiMartino Booth makes the point all the time that the way she frames it is that he was embarrassed by the Fed economists telling him that inflation would be transitory. And now he has egg all over his face for having to go out there with those talking points. I don't disagree with Danielle on that point, but I can also see that Powell just had a plan, and that plan was wait for SOFR to get fully on board, so that we can get rid of the euro-dollar futures market, which is now dead. We have now the SOFR futures market, and that died in 2022.
And I agree with you. That was significant. Very few people understand that, but yes, that was critical plumbing. Right. Yeah. But keep going. Yeah.
Okay. So once you have those things in place, then you could start raising rates. And then the speed at which he raised rates, that was an unbelievable U-turn. And I don't see anything nefarious about it. I think it's the kind of thing that it's nefarious depending on what your perspective is. But if the Fed is saying we need to get control of our own monetary system, which we didn't have with the Eurodollar system,
correct,
then the best way to deal with that problem is to raise rates as quickly as possible and force a political change on Congress when the fiscal problem, which guys like Luke Roman and everybody are screaming about, oh my God, we're spending so much money now in the servicing the debt, right? The interest on the debt is now the big budget
greater
item,
than our defense budget. Correct.
Right. Yes. So you force a choice, and what happened? They tried guns and butter on the Kalins of October when McCarthy signed his deal with the Democrats, and we'll backdoor the funding for Ukraine, and he's out as speaker 3 days later.
Yeah.
Done. Yeah. It happened. These are monumental changes.
I know they're monumental, right? And I do believe on the geopolitical chessboard that the United States having a weak president and not having a Speaker of the House it's not coincidence that the world's falling apart during this period. Yeah. That
is also correct. And so into that vacuum, that power vacuum, right?
Yeah.
The idea that the long end of the yield curve wouldn't start rising, as the bond vigilantes said, okay, let's believe what's going on here. I actually happen to look at Powell now and go, he's the ultimate bond vigilante. He's calling the bluff of all the other central banks about their
he certainly
policy.
Did that. Correct. Yeah. He certainly did that, right? Because he kept raising in the face of it when everyone else was screaming. But I also recognize that the arithmetic that Arthur Hayes has done is correct, which is that the Fed has not actually been tightening; it's been loosening because
credit conditions have been loose.
Well, but also yes, but you know what? One of the strange things about this cycle, and Albert Edwards is the one who made me realize it. And back in my Morgan Stanley days, it all made sense because I was working with corporate treasurers. Mm-hmm. The corporate treasurers played the yield curve brilliantly. The commercial bankers, not so much. Okay. They bought into the transitory argument and said, all right, I've got zero capital requirement to buy treasuries, so I may as well just play the steep yield curve and go buy 10s and 30s and back my demand deposits with 10s and 30s. Okay. Then when the yield curve inverted, guess what? There are solvency problems, and that ultimately triggered, as we talked about earlier, some of the bank failures. And I suspect more to come because the mark to market on bank balance sheets is staggering. And one of two things is going to happen. Either a bunch more banks are going to fail or get gobbled up. Another bank M&A wave like I worked on after the 1993 bond market crash. That was when I came into Wall Street and I did a bunch of bank M&A. There were 10,000 banks back then. There are 4,600 right now.
Mhm.
Okay, so it was cut by a little more than half in 30 years, and I think it's going to get cut in half again, if not more.
It's
Okay,
very possible. I'm not arguing with you about that. I'm
yeah,
not saying that there's not going to be another round of this.
big
Without
bank
it.
M&A wave. Either that or the Fed's balance sheet, that BTFP facility, is just going to balloon in size because the Fed is saying, all right, we'll give you credit at par for your 10s and 30s that are trading at 60, 70 cents on the dollar. Okay, so there's an implicit subsidy to the banks who can bring that collateral to that BTFP program and borrow against it at par, even though it's trading at 30, 40 cent discount to par. Okay, and the other thing that I think will probably end up happening is the BTFP collateral will end up being expanded to include loans, because right now it is securities, high quality securities only. In other words, mostly U.S. Treasuries. I think mortgages are in there. I don't recall for sure, but it will end up being expanded. Okay, so the Fed's balance sheet is going to expand, and this is the crypto Hayes, Arthur Hayes's calculus, that there's so much income coming back in, and this is the Albert Edwards math as well, because the corporate treasurers locked in long-term borrowing at 2%, and they're now sitting on these huge cash piles at 5%. So they did better than the bankers. The old 3-6-3. You borrow at 3, you lend at 6, and you're on the golf course by 3.
Right.
Okay, that used to be what banking was.
Right.
Now the corporate treasurers, it's you borrow at 2, you earn at 5, and you're on the golf course by 3. Okay, right. It's the corporate treasurers that did it right. It's the bankers that got it backwards.
And well, no, you're absolutely right. And when I brought this point up to Danielle when I had her on the podcast in June, I asked her about the BTFP, and she said, well, if it was a bailout to the banks, interestingly enough, then the BTFP would be $2 trillion. But because it's at par and at Fed funds rate that they're borrowing,
yes, the borrowing cost,
the borrowing cost is so high that's why the balance is only like 0.11 trillion. That's why I don't like to put it in terms of billions because it sounds terrible. It's 0.11 trillion and not 2 trillion.
Right. It could be 2 trillion.
Danielle's point
soon.
Was that the Fed is saying, that Powell's saying to the banks, go raise capital.
Yes. So by the way, I agree with him. I've been saying this for years.
Right.
And Brainerd was one of the governors who voted against the approvals of dividends and stock buybacks from the big banks for years. If you go back and look at my Twitter accounts, you'll see me saying somebody's got the balls to say to the banks, you're undercapitalized. And it was Brainerd.
Of all people.
Right, because she's an MMTer, right? But she was not wrong. And yes, I mean, it's crystal clear. The banks are undercapitalized to me. And it's because the world in which we live in now, which was a point that I've been trying to make to the bankers. If you go back to my Cato speech about stablecoins in 2020, I started talking about how there's bank run risk in the banks that are serving this industry because these liabilities are hot, super hot. And we now know because of online banking, I didn't get that part. I did get the part of the crypto banks. I knew that the crypto banks were dangerous. They were at risk of a bank run because they had 10 cents in cash to back their demand deposits. Okay. So if 1/10 of their demand deposits left, bank run, banks hit the wall. Okay. They needed to have 100 cents in cash to back their demand deposits, which is, by the way, Custodia's business model, plus capital on top of that. Okay. So we're set up for exactly that scenario because we understood from the get-go that these are fast settling, so-called hot liabilities, hot money liabilities. Okay. But what I didn't get is that it's not just crypto, it's any online banking liability where you can go with an online banking app through Fedwire and withdraw all your money from a bank within the span of minutes. And that bank, it used to be that in the liquidity exercises the bank examiners would do, they assumed the fastest that a bank run would happen was over 2 weeks. Now it's 48 hours. And I actually advised it should be a 6-hour period. You should have to be able to survive a stress of a 6-hour period. Where did I come from to bring the 6-hour period? By the way, months before Silvergate and Signature failed, the 6-hour period that's what it took for Terra Luna to unwind.
Right.
Okay. So like this is how fast stuff is moving. So the old business model, the old banking business model of 363, borrow short term, lend long term, and just capture the spread, it doesn't work. And so now the impact of that is, what does that mean for all of the small banks? As somebody who saw this exact same environment at the beginning of her career and worked on a lot of bank mergers because the small banks just couldn't survive it. It was during the bond market crash in the Greenspan era, post the 1987 stock market crash and the 1989 real estate crash. And even, by the way, before then, the yen, the Japanese markets bubble and crash, right? These things were all connected. And then Greenspan comes in and raises rates and steepens the yield curve to recapitalize the banks. And that was one of the steepest periods of yield curves in US history. Mm-hmm. Okay, so, but it was engineered by the Fed to recapitalize the banks. And the Fed was fine with what was happening in the secondary effect, which was that a lot of the small banks didn't survive. Right. And again, you know, I was there as a kid working on those bank mergers. That's when I met Brian Moynihan. He was running strategy for Terry Murray at Fleet. And Fleet bought Shamit. And then, you know, a few mergers later, Brian Moynihan's the CEO of Bank of America 30 years later.
Right. It's fascinating. And I won't argue in any way that the Fed is not consolidating power in some way, or that they don't have no option other than to do that, that there are too many banks that are undercapitalized. And now the question is that because of 12 years of zero bound rates? Like, you know what I mean? This is there comes a point where you have to ask yourself, like, you know, what choice do they have? I mean, again, I'm just going to take the Fed side on this and just throw it out there. What choice do they have? Go back to the zero bound and extend the problem another, I don't know, 5, 6, 7 years? Or do they bring the thing up, they bring the rates up, start getting rid of the most egregious leverage within the system, and then at some point,
which is $0 market,
and then Powell will pull back. I think you're starting to see the noises now. I think he's going to get the 6% over the next 6 months. I think he's going to do 2 more 25 basis point raises. He's going to try and hold on again. I'm going to invoke Danielle here. She's talking about her meatball recipe. If Powell can hang on, right? Yeah. If Powell can hang on another 6 to 9 months at these levels and without breaking everything, and domestic liquidity conditions are at least reasonable, and we get a renormalization of the yield curve, that will do is make the dollar now everybody else's problem, and then everybody will finally disabuse everybody of the notion that the Fed is ever going back to the zero bound. Once that magical thinking is gone, now everybody starts acting somewhat rationally about how they're going to price risk for the future, and then he can cut rates and bring it back into the 4% range. Interestingly enough, as I watch the SOFR futures curve like a hawk, right? Every day. I chart it, like I look at it every morning. I go up and I look at the yield curve and I plot all of the internal spreads, the 1 month, 2 month, the 2 month, 3 month. I post this stuff on Twitter every once in a while. And I said, like, the yield curve is going to normalize. All these inversions are going to tighten. Yellen is going to fight it as much as humanly possible, because she's trying to keep, well, you can argue that she's trying to keep borrowing costs down for the U.S. as much as possible.
For the U.S., yeah.
But at the same time, I also think that she's trying to help Lagarde at the ECB keep their 10-year markets from blowing out to the upside, because as bad as it looks on the United States balance sheet, remember that
Europe's worse.
Europe had $14 trillion worth of negative yielding nominal debt. Not 2 years ago, right? Or 10 trillion, or whatever the number was, some ludicrous number. So the SOFR futures curve in the last month, the terminal rate, and that's the rate where, that's the date at which the SOFR futures curve starts to rise again, right? Okay. So it's around March, anywhere between December 2025 and June 2026 is where it levels off. That terminal rate of the Fed's loosening cycle has moved from, well, before yesterday or before today, moved from 375 to 425. After the last Fed meeting, where the dot plot came in 50 basis points higher than everybody else, the SOFR futures curve moved up 50 basis points, and it moved up significantly, not just on the long end, but even in the belly of the curve. So Wall Street, so everybody started to say, okay, this is a different environment than we thought it was. We were in. Okay, now we've got a renormal. We've got a move back. But every time I've seen something like that in the last 6 months, where there's a big event, Yellen goes to China and begmans the Chinese to buy treasuries, which they did through Hong Kong, not through China, but China bought like $20 billion worth of U.S. treasuries in Hong Kong. The TIC report was very clear for July, very clear where the buying was.
I didn't follow.
Yeah, no,
Okay,
I break that thing down by region, by the way. The TIC report. These are the three things that I kind of to see if I'm to constantly error check myself as to whether I'm going off the deep end, right? Because you got to do this.
Yeah, and you have a very non-standard view, absolutely. So you've got to look at the data to be sure you're
right. And fair enough, right? So what I said was Yellen went to China to begman the Chinese to buy some treasuries, but in his Xi's gib was that no Ukraine and NATO. And then that happened the weekend of the NATO summit, where all of a sudden was fait accompli.
Right. Yep. Yeah.
Right.
No longer.
And
is.
I said then we'll know in the July TIC report if we see the Chinese buy treasuries, it'll show up. Wow. So it showed up in the September TIC report, and it didn't show up in China's numbers, but it showed up in Hong Kong's numbers. Okay. Oh, by the way, you know who the biggest buyer of U.S. treasuries have been over the last year?
Japan.
The Bank of England.
Oh, really?
Yeah. Europe.
Okay, see, I have not watched this in a long time. Japan for years was the biggest one.
So if you break down, and I'll send you my chart on this. I'll send you my spreadsheet on this. If you break down the TIC report of the central bank holdings of foreign central bank holdings, and you break it down by region, and you break the regions down so that all the, let's just put it this way, all the British offshore havens like the Caymans and Bermuda, you lump them into Europe. And you take Asia Pacific, you take Europe, and you take the rest of the world. For the most part.
But remember, but can I interrupt you? Sure. Just one quick thing, because I used to watch this all the time. It's been a year since I have, so my information is outdated clearly because there was a major change. It used to be Japan buying them all, but we used to look at Brussels, and that was the Middle East. That was the Saudis. Recycling the petrodollars, but it came in through Brussels. So you have to.
It came in through Europe. It came in through Belgium.
Exactly. Right. It came in through Belgium. All right. So now finish your point.
Okay. So what I'm going to say is I don't think the Saudis are. I'm not sure that the Saudis are whatever the Saudis are doing is not the same. But if you break it down that way, what you see clearly, because the Belgium numbers haven't really moved very much, FYI.
Okay.
But Europe has bought over $500 billion worth of treasuries since. The bottom in the euro in October of last year, and Asia Pacific has sold roughly the same amount, and the rest of the world is like meandered around about 100. They're about plus 100 billion. But for the most part, what the Asians have sold, the Europeans have bought.
Europeans bought
to defend yields.
Right, exactly. That's Lagarde.
Yeah, that's Lagarde.
But is that showing up in the Target 2 and any other data?
I haven't been looking at Target 2 directly as well, but I think it is. It most likely is. The Bundesbank. Then there's the Bundesbank is bankrupt. I mean, there was the
Bundesbank has been bankrupt almost since the origin of the euro. I mean, literally, right. But because it's all guaranteed by the. I mean, they have a very different structure than the U.S. Fed, right?
Yes,
the regional Federal Reserve banks. When you talk about the Fed's balance sheet, it's actually the 12 regional reserve banks rolled up into one. Right. In Europe, the country's reserve banks are, in theory, autonomous, and so they report. And to your point, the Bundesbank has had negative equity for it's well over a decade. In the early years, it wasn't, but once you started to have, the Greek crisis, and you started to actually, for a while there, not see fungibility of euros because I forget the letter on the paper euro bills that were printed by the Greek central bank. For a while, nobody wanted those, right? Everybody wanted the Bundesbank ones because the Bundesbank was solvent. But now, if you go look at the Target 2 balances, the Bundesbank, that the Germans, when this all does come unwound, there's going to be hell to pay in Germany because the average German had their pocket picked for the industrialists who were looking for a weaker euro to basically for their mercantilist policies, right? And who lost? It was the German savers. And when
Oh,
this all
that,
comes unwound, and the South defaults on the North in Europe, are they going to go back to butchering each other, which they seem to do every, 75 or so years,
it,
unfortunately.
it's clear that I think that the goal, and if I break it down for, again, by player here, what I would say is the following. All of this is forcing a fork within the European Union, right? You've got the people you've got the South that wants a clearly weaker euro.
Yes.
They're not good. They're going to get their wish because Lagarde has to decide between defending credit spreads between them and the U.S. and the euro, and she's chosen so far to defend credit spreads because the euro is
Correct.
now $1.05. Well, today it's $1.06, but again, it's like everything else,
Yes, because the dollar, yeah,
because the
in the
dollar's
short
eating
term.
everybody's lunch, as Brent
Yeah.
Johnson would put it, is drinking everybody's milkshake. And
Yeah.
and I had Brent on the podcast, and we did a get to know you, and we, and our chat was very amiable because we both basically agreed, but from two completely different perspectives. I was giving the geopolitical imperatives for these things, so I look at it this way. I say, well, if you're the Fed and you've got a pretender to the throne, and you've got a pretender to the throne, the ECB,
Yes.
and you've got an international oligarchy that has been using my currency, my product, the dollar, as the means by which to prop up your pretender to the throne. Well, then all I have to do is take away the supply of that, change the way the dynamic about how those things are priced, i.e., SOFR versus LIBOR, and now all of a sudden we own you, and all we have to do is keep interest rates as high as until you finally stop wriggling. I see the ECB like a dog that refuses to submit, and the Fed's got their hand on the dog's chest saying submit, submit, submit. They're going to take a couple of bites. They're going to take a couple of bites and get scratched up a little bit, and that's going to be the American banking system. But our choice is, otherwise, we lose the commercial banking system completely in the U.S. We lose political control over the U.S. And so we're at that moment where we can't. Where the Fed is almost has to do what needs to be done, and then everybody's rightly making the oh my God, this is going to break this, and this is going to break commercial real estate. Oh my God, this is going to be dogs and cats living together, and then to extend the perception that the U.S. is in worse shape than everyone else is the goal at this point. And every event that comes out is meant to do this very thing. And so I could go even farther as to where I think, Britain versus Davos and blah, blah. This starts to get really complicated, but the basic message that I have at this point is that what used to be a cartel of everybody screwing us is breaking down, and the sharks have all turned on each other. And
everybody's screwing the U.S. Is that what you mean?
Well, everybody's trying to screw the U.S., and the U.S. is saying, but we're still the biggest Ponzi scheme. Pardon my French, Caitlin. Fuck you. And we're going to do this, and my dollars are now your problem as opposed to the other way.
Correct. So, that's
the way
interesting. Yeah. Wow. And part of the reason that you and I reconnected is I've been watching some of the things you've been saying, and again, you march to your own drummer just like I do, and I so respect that. And it just blows my mind to see the different perspective, because it may very well be true. I don't know if it is, but it is crystal clear that the geopolitics are playing into this, and it comes down to something my mentor taught me that was one of these aha moments. I don't know, more than a decade ago, that the origin of every war in human history is balance of payments imbalances. You go back to, we couch them as fights over land, or fights over religion, or fights over naval supremacy, etc. But at bottom, it comes down to money, and the fact that the currencies have been manipulated, and somebody owes somebody something and is defaulting, right?
Yep. That's where we are. And it's nothing. I don't think it's anything new. And I think it's a weirder game than, in this particular instance, it's a weirder game than that, because one of the things I did recently was to connect some dots I started thinking outside the box again about the British influence over our monetary system and the effects of LIBOR and the effects of how things have
So
gone from World War One through to today.
okay.
Okay, now
Yeah.
I'm gonna run this
Fire
by you.
away.
This is a
Yeah,
riff that
I'm
I've done a
interested in
couple of
this.
times, but I'm going to try and
Okay.
do it shortly. I'm
Yep.
going to try and quickly here.
Yeah.
So we adopted Britain's foreign policy under Woodrow Wilson, globalism, right? League of Nations. We got involved in World War One. We bailed Churchill out in World War One to allow the Brits to win World War One. What happened
Okay.
after World? What happened? And I'm also riffing off of Martin Armstrong's arguments that the Fed was not at the center of the anti-Friedman, that the Fed was not at the center of the Roaring Twenties. That what happened was after World War One, Britain returned to the $20 per ounce of gold
massively
stamp.
deflationary.
Massively
Correct.
deflationary, and Germany was on the hook to pay all of the reparations in gold, which is what the cause of the German hyperinflation was.
Which was inflationary. Correct.
It created a massive sovereign debt crisis all across Europe, causing
Correct.
massive capital inflow to the United States, and that's what actually created the Roaring Twenties. Okay, the Fed was really,
it was brand new back then, right?
Yeah, the Fed was less than 10 years old.
Well, and in the Depression of 1920, which was equally deep to the Great Depression, you had 20% unemployment. You had the same contraction, peak to trough of GDP. No one talks about the Great Depression of 1920. Why? Because it was over in 9 months because the Fed did nothing about it, and the U.S. government paid down its debt, and markets just cleared.
Right. Yeah. And Warren Harding got the moniker "Do Nothing Harding,"
right,
before he died. And I'll put on my tinfoil hat and say, and who killed Warren Harding? But
wow. Okay, I never thought of that.
Now,
okay, but I interrupted you. You were going to put this concisely, but it is an important piece of the history that very few people understand. Yeah,
absolutely. It's a standard like Mises Institute talking point about how to deal with the depression, which is look at the depression of 1920, and this is how we're supposed to deal with it. Let markets
and
clear.
The Fed did nothing because it didn't realize what powers it had back then, right? Probably. And so that's why it wasn't active during the 20s. Yeah.
Okay. So we have that. We get the massive deflationary wave. We get a sovereign debt crisis in Europe. All the capital flees into the United States, creates the Roaring Twenties, right? Then once the dollar goes ballistic and our markets become too expensive, and Europe crashes, and everything in Europe is now 30 cents on the dollar, for lack of a better term. US is too expensive. Europe is cheap. Money, the hot money that flew out of Europe, that was old European money, flows back into Europe and starts to stabilize Europe.
Yep.
Okay. And when FDR devalues gold to $35 an ounce and institutes FDIC to get people to now trust the banking system, now the pre-war industrialization of the United States can actually start to take place, ready to fight World War II, which was also a Winston Churchill project. Again, this is a frame. This is not the only frame. I want to make abundantly clear that this is not the only way to look at history, but it is an underviewed version of history that needs to be integrated into your matrix of what you think happened in the U.S. and European history in the lead up of into World War II. Now, once World War II happens and we fight World War II to liquidate Hitler, who was clearly created to fight and kill the Russians. Okay. And Hitler was in many ways set up exactly the same way Putin was. Hitler had other personality defects and other things that played into all of his crazy and everything that he did. And I'm not saying that we shouldn't have fought World War II. I'm not saying any of those things. I'm saying that events were manipulated and allowed to occur in these ways. And we were brought in ultimately to fight, effectively fight a war that the British picked that they couldn't win. And clean the mess up. And then after we win the war, we're left with Churchill, Stalin, and FDR at Yalta divvy up the world. And Bretton Woods happens in 1946. And what do? After raising debt to GDP in the United States to 240+%, we go right back to $35 an ounce, the pre-war thing, the pre-war value for gold. And what do? We set off another deflationary wave, what we actually do is we inflate to high heaven, we institute the Marshall Plan and rebuild Europe.
Financial repression, correct.
Yeah. Same thing. And then eventually...
Well, because we took the lesson that you don't want the deflation, which is the path that the UK took after World War I. Because
No,
by
I
then
think
we were the world's reserve currency.
right.
Right.
I think, well, we were becoming the world's reserve currency. I think the Brits knew exactly what they were doing after World War One, and also I want to believe they also knew exactly what was happening after World War Two. And then now we're on that path, and now we're into 2023. That system that was put in place, Bretton Woods falls, the London gold pool fails in '68. 3 years of intense negotiations. Nixon closes the gold window. The dollar reserve standard is birthed, not
Yep.
completed until Volcker wrings out all the inflation that's incipient with all of that by
Mm-hmm.
1980. And then we have about what, 30 years worth of the dollar reserve standard that breaks
Yes.
in 2008. And the dollar reserve standard fails in 2008. 3 years of intense negotiations. We get the coordinated central bank policy of the 2011 through 2021. Now that ends in 2021 when Powell starts to raise rates and starts to tighten.
Interesting.
And
Yep.
now, because he knows SOFR's coming. Why? Because he started the
Right.
SOFR
Because
project
he
in
gets
2017.
control. Yep.
And
He gets
so
control
now
over
we're
rates.
into that. We're still
It's
in
no longer
negotiation.
the London banks, to
And
make
now
that
we're
clear.
into,
Yeah.
and now the next, and so what they're trying to do now is get us to fight World War III over Ukraine. And as of this weekend, Israel. Now,
In the Middle East.
now I don't have a good answer as to who. I think everybody saw the opportunity here on both sides. I think Netanyahu. This is a Baker noodle, ready? Did Netanyahu allow the attack to happen in order to be able to do what he always wanted to do?
That is a question, right? The Egyptians claim they warned. And so was it complacency or was it deliberately ignoring? That is the question.
And, and that's one. And on the other side, did Iran see the political turmoil in the United States and say, hey, we can take advantage of this and we can force a fork? The United States can't afford to pay for both Ukraine and Israel.
Correct.
And so pick one, guys. And for once, two British projects, geopolitical projects, Ukraine and Israel, and somebody said, okay, I'm moving my knight here and I'm taking either your rook or your bishop. You choose which one you want to lose.
Wow. Okay, Tom, you just blew my mind. Yeah. I mean, I knew we were going to have to choose, right? And you got to throw Taiwan in there as well, right?
Taiwan is another, is another one.
Yeah.
Armenia is another one, but that's more of a pawn. Like when you start to, I can go through all of these for you.
Well, there's so many. That's become a hotspot again, and very few people are talking about it. Mm-hmm. Yeah.
Even I'm not really talking about Armenia very much. My community is talking about it like you would not believe. You should see this.
Oh, interesting.
Oh, my community is friggin' awesome, dear. We have a we
you have a lot of people who
they are so and they keep me on the straight and narrow every day. But it was interesting. So when you think of it in those terms, right? And then everybody had an incentive for something to happen this weekend in Israel. Because the thing that should really scare you, ready, is that both things are true simultaneously. And everybody wanted this. That scares the shit out of me. Because this puts us on a path to a world war.
Well, I do worry about that because of how much warmongering is happening in both political parties right now. Mm-hmm. And I've been asking for a long time, where is the anti-war left? The 1960s hippies anti-war left. They've been incredibly quiet, but they popped their head back up this weekend.
Yeah.
For the first time I've seen that in years.
That would be good because remember that they were co-opted by the Hillary Clinton project helped by GCHQ and MI6 called Russiagate to hate the Russians and get them ginned up for war. They were gaslit into believing this because, they hate Trump so much.
Right. Yeah. They hate Trump more than they hate war in a lot of cases. I grant you that. Yeah.
And it's crazy and it's sad. And then we now have the dispensational right, right back on the bandwagon for, we have to support Israel. I'm like,
oh my gosh,
don't have the money for either of these things.
Rhetoric that's coming out of some of the presidential candidates on the right just has made my jaw drop. Yeah. And to your point, we don't have the money. No. Right. The Uniparty thinks the Uniparty has become MMTers. They think that there is no need for fiscal discipline because they buy the Krugman argument. We owe it to ourselves, and that they can just keep spending. And the reality is they're mortgaging our children's future. And the truth is that, as I go back to what I said, that aha moment, that the origin of wars is balance of payments imbalances, and we're just building an even bigger one.
I want to go back to something you said earlier that you have now known for a fact, which is, and it's a lovely point that you made, and I'm glad you made it, which is that Elizabeth Warren is in charge of all the financial services, the financial policy, and what has she been doing for, I don't know, 6-7 months now? She's been spearheading the argument to revoke the Fed's charter. You've heard this talking point from Warren and her acolytes for months now. And this is a clear tell to me that, and I've said, when that started, I said, when the Powell starts to do this, the Democrats are going to run on a fake populist campaign of the Fed took your world from you. The Fed took your house. It was the Fed raising interest rates that destroyed your life. You need to blame the Fed. The Fed is going to be the central talking point for the Democrats in the 2024 election cycle, because the Fed is the main vector by which the project for a globalist takeover of the world runs through the Federal Reserve. They don't have monetary control of the United States anymore. Again, not painting Jay Powell as a good guy. The Fed I think is in pure survival mode. I think that the insider trading scandal of the fall of 2021 put 3 terrible people on the Federal Reserve Board. We just got new people. I think it's not Lisa Page. That's the wrong name, but
Cook.
The latest additions to the Fed Board of Governors. Danielle's been screaming about this. Like, look at what's happening. They're taking away all of Powell's allies in order to run the clock out to get rid of him by 2026 and try and keep this project alive until they can get rid of him, and then they can go to MMT and they can destroy the Fed. I only analyze the Fed from the Fed's perspective of the first rule of every organization. The first rule of every organization is survival.
Survival, right? Especially bureaucracies.
Right.
Yeah.
And so that's the way I view the Fed. And at this moment in time, them doing what they're doing works to our advantage, and we'll have to deal with them later. If they win this battle in the short term, then we have to deal with who they are. And that's always been my argument. And
it's so interesting because, again, Custodia, we find ourselves in the middle of this, right? Mm-hmm. Because the White House shot the bazooka at us. The Fed played ball. The Fed governors voted against the Custodia application, but now here comes BlackRock, right?
Right.
So it's a lot easier to make the argument that they're protecting the incumbents. And I'm talking, when I say they, the entire Biden administration.
Yeah, no, I think the Biden administration and the Fed are not on the same page at all. I have not thought that.
Then why did the Fed do the White House's bidding in Custodia's case?
Again, Custodia is a fork for everybody at this point, and I think Custodia may wind up being one of those things and things like it, that once the Fed is done with the fight that they need to win, that Custodia they'll be able to, that things will change. That's what I think. I think as of right now, I think Custodia is just an issue that they can't quite wrap their brains around, and they have bigger fish to deal with at this point. I don't know. I don't have a good answer. I wish I did. I really do. I know it's like that black swan that if it's like that little thing that if I can just figure that one out, then maybe you and I would agree on more of this stuff, and we'd be right. And we would have the answer. I don't care about being right. I care about getting the right answer. And you're asking a very, very important question that I don't have a good answer to.
Well, and again, our business model is US dollars for the digital asset industry, the law-abiding parts of it, mm-hmm. and Bitcoin custody and money market funds. And the money market funds piece is a pivot we made when the Fed denied us our master account. And it was an acknowledgement, of course, of what had happened in the interest rate environment. Nobody wants to sit in non-interest bearing deposit accounts anymore when you can earn 5.25% in US government risk through a money market fund, right? And you've just seen this bank walk from deposits in the banking system over to money markets. It's happened pretty much every week, relentlessly, mm-hmm. quietly, but on that
Yeah.
upswing since
No
March,
surprise.
right?
No
And
surprise.
Custodia is offering those things, right? So, but yeah, I mean, look, it's going to be interesting because the Custodia situation is in the hands of the courts, and there have now been multiple lawsuits filed over the same statutory question
Mhm.
related to, does the Fed have discretion or not? It does shall mean shall in the statute,
Right.
and Custodia, it's public information, is contending shall mean shall, and there is a right to a master account for validly chartered depository institutions. The Fed does not have a veto, and that is what is being tested. Everything that Custodia did, if you go back and look at our history, was bending over backwards to work with the Fed.
Right.
We even applied to become a Fed member bank, which would have made us directly regulated by the Fed itself.
Wow.
To address a concern that they had, which is because we were not FDIC insured, because the FDIC, of course, refused to insure us, right. that we wouldn't have had a federal regulator. We said, okay, we got back channel guidance that wink, wink, you should do this. When we did it, we got back channel guidance. That was a good move. And then a Fed governor told a senator, one of the applicants had distinguished itself by applying to become a Fed member bank. And then in the end, it was a bait and switch. So
yeah, though there's something serious going on here, and I don't know what it is. And it could be a horse trade that it could be a horse trade behind the scenes that neither of us are privy to at this point. Is maybe that's, well,
we're not going away, and we survived it.
And I want you to. And I believe me, I'm on your side here. I think what you're trying to do with Custodia is exactly correct, and none of my analysis here has anything to do with making apologies for the Fed. If the Fed's wrong in this instance, the Fed's wrong, and I'm not gonna argue with you. I said,
well, the decision is not in its hands anymore, right? I mean, the decision was in its hands when we were spending 2.5 years bending over backwards trying to find a path forward, and doing everything we could, including applying to become directly regulated. Right. And then the White House took over, but it's really fascinating because it raises the question in the context of what you laid out and what is, again, this open secret that Elizabeth Warren and her acolytes are in control of financial services policy, that she has a veto, I'm told, over all of the financial appointees in the Biden administration. Right. And that it was her acolytes. And Nick Carter has done a very good job of literally naming names, who were the people who locked arms to push on Operation Choke Point 2.0, which was this attempt to kill the crypto industry. And he put too many names on the page, but and he's not 100% right, but he actually has a chart with pictures of the people involved. Okay, so you can go look at it yourself, and you can see who from the Fed he alleges was involved. I'm not commenting, but yeah, this was a coordinated effort to kill crypto. And, I guess if you put it in the context of, and it failed, and now we're headed into election season, right? And the main acolyte, Leo Schwartz at Fortune, just wrote an article last week. Not a lot of people saw. The main acolyte of Elizabeth Warren, who was the architect of this at the White House, left. He's gone. So now the question is the pendulum going to start to swing? Is the Fed going to start to realize that this was institutionally not the right decision for them, right, and open them up to exposure in multiple lawsuits that were unnecessary? Maybe. And they've never, the Fed is not an institution that regularly gets sued. Okay, so there's a law review paper written by David Zering that calls bank regulation corporatist, and it analyzes how little the bank regulators are sued. And he aggregated all the data from lawsuits and found that the Fed was sued twice during the decade 2010 to 2020 by banks that it regulated. And one of those lawsuits was over the constitutionality of this Consumer Financial Protection Bureau. So it doesn't really count. Right. So this is not something the Fed is, I'm just pointing to the facts here, not something the Fed is regularly facing. And it's now facing 3 lawsuits from banks. And I understand more are on the way. So, yeah, I mean, you might make the case this is, a thorn in the side. The impact of all of this, though, is that it pushes power back to the U.S. states.
Yes. And that's a good thing. I in no way matter. I mean, again, and maybe that's the again the best way you can argue as to why the Fed is hostile to your project at this moment in time, is
because it
that
bubbled up from a U.S. state.
because maybe, and they and maybe there's something deeper here. Again, there's got to be some other angle on this that we're missing, and because it doesn't track otherwise. Because from my perspective, looking at it, unless it's just the timing is just wrong, and that eventually banks like Custodia are going to look to be looked at by the Fed as something that as allies, exactly, as a proper vector by which to, you know, properly recapitalize and bring the U.S. banking system
and stabilize the banking system.
Right.
Yes.
And stabilize.
Yes.
Exactly.
Tom,
unless of course there's just too many, unless it's, you know, remember, Jerome Powell works ultimately for Uncle Jamie Dimon and, you know, and all the rest of them, and all the rest of the big New York banks as well. And that may be where this is coming from. As we've been talking, when you first brought it up, I started thinking in terms of my normal frame, which is all this geopolitical stuff. And then I forget that, like, at the end of the day, if the gangsters on Wall Street want your business, then they're not going to allow you as they're going to not allow you as a competitor.
I'm not talking about that. I'm not commenting about that.
That's all.
I'll let you go.
No, that's fine. You stay very quiet on that. That's my job. That's my job. So
all I know is we built from the ground up, and it takes time to do this. Mm-hmm. We built from the ground up a proprietary Bitcoin custody platform designed for Bitcoiners by Bitcoiners.
Right.
And I mentioned this at the very beginning. It is a segregated wallet structure where we will actually custody your UTXOs. If you put your money into a Coinbase or a BitGo or Anchorage or any of the other custodians, Fidelity, in fact, a couple of weeks ago, just wrote an article talking about the strength of the Omnibus account wallet. The Omnibus account structure is how most of Wall Street works. You send, if you open an account at Schwab, let's say you got a physical share certificate for Disney shares from your parents, and it's been sitting in your safe deposit box, and you take it to Schwab and say, I would like to open an account with you, and I'd like to deposit my Disney stock. What you get in exchange is an IOU. You have the real thing, okay? When you deposit it at Schwab, they take it from you and they owe it back to you. So what you own now is not Disney shares, you own an IOU from Schwab, okay? So what we envision is something that is critical, which is very different, which is you don't have to go into that omnibus pool. Okay, if Schwab goes down and you owned those Disney shares, let's say you never sold them, you just transferred them to Schwab. What's going to end up happening is you get a pro rata share of all the Disney shares that Schwab had in its inventory. They will distribute that out to all the Disney share owners. Okay, this is how bankruptcies of broker dealers work. And if they've done their books and records properly, then you get your pro rata, you get your actual Disney shares back. But more than likely, they didn't do their books properly, and they were rehypothecating and playing games behind the scenes because they can get away with it. That's the way the accounting works. That's the way the broker-dealer rules work. If you read the fine print, they have the ability to do this. You've given them the right to rehypothecate your shares, okay? So more than likely, what you're going to get is a pro rata share of what's left. And it might be 95 cents on the dollar. It might be 92 cents on the dollar. In the Celsius bankruptcy, it was 72 cents on the dollar, okay? But that's my point, right? That these things become IOUs. What Custodia built is very different. It is set up for segregation. You're not going to go in if Custodia fails and you get a pro rata share of the entire pool. You get your actual assets back. Now, if your wallet was the one that was breached, you need insurance for that, and you have the ability to buy up for insurance for that. And that's a different model. But the point is, it is very much it's respecting property rights. We're not going into what is a collective model where we all pool our risk together. And if the financial institution fails, you get a pro rata share of what's left back. No, it's turning financial services into what it should be, what Satoshi, I believe, envisioned, which is that the banks are service providers, not counterparties. Think about
Bingo.
that concept.
No, bingo. No, that's outstanding. And maybe you just told everybody why the Fed said no. I hate to put it to you that way because I'm listening to this going, yeah, that's not the way they want that system to work. No one wants it. No.
But Tom, I mean, maybe, okay,
Yeah.
maybe because they believe in fractional reserve banking, rehypothecation, et cetera. But here's where they're wrong if they do believe that. You don't want to mess with Bitcoin, right? It's the apex predator of finance. We talked about how 94.8% of the Bitcoins outstanding did not move in the month of January, January, in the month of September. Right. 94.8%. What does that mean? It means the big Wall Street firms and central banks in the world will never control Bitcoin because there's just not enough of it changing hands. And you and I talked about earlier, we were talking about the Eurodollar system, the clearinghouses. This is such an important point. I've made this point before. And I think it probably goes over a lot of folks' heads. There's not enough liquidity in Bitcoin for there ever to be a clearinghouse built of meaningful size. Because if only 6% of the Bitcoins are trading, okay, they're never going to be able to turn the futures market into the dog that wags the tail.
Right.
Exactly. So the tail that wags the dog. Right. Okay. So this whole concept of what we talked about earlier with, why isn't there coal futures and, the death of the gold futures market? Mm-hmm. The Bitcoin futures exist, I think, for the miners. There is a legitimate, as opposed to just the speculators, there is a legitimate mining market developing for hedging Bitcoin mining. Okay. And cash settles futures have a legitimate use for that.
Okay.
Right. But that's it. Right. It's not going to end up being where the futures market wags the spot.
Right.
Tail.
Because they can't produce 200 paper Bitcoins to one.
Correct. And because those of us who are the long-term hodlers, we know how to force a reckoning. That's why Bitcoin is the apex predator. So coming back to your point, if you think that the Fed just wants the ability to rehypothecate this, that is the surefire way to bankrupt GSIBs. I hope they're smarter than that.
Yeah, me too. I don't know. I believe ultimately that there's a lot of what I'll say is this. There are a lot of people who are still trying to deny the fact that Bitcoin is a legitimate competitor. And these are delaying actions. These are, what's the word I'm looking for? These are rearguard actions. And so what you're doing, and so I'm not arguing with you, Caitlin. I can see why they would say no to you. And I can see why you should not stop fighting.
That's, by the way, not what they said.
Right. Of course, they're never going to say that. They'll never say that, of course, because they can't say that. In the same way that they can't say we're purposefully draining the COMEX to move all the gold, the gold settlement into dollars at scale because we don't want the gold to leave the country. They'll never say that, but that's what they're doing. And so, again, I will revisit this in another 4 to 6 months. You and I will chat again and we'll see what the update is. But, just think about where we are today versus where we were in April. I think it was April when we spoke last. Like, it's amazing. Like, it's a big update that you've given us today. And I think that's
they shot a bazooka at us and we survived it.
I know. It's like, well, so Caitlin, are you a Russian asset? Because by God, they shot a bazooka at the Russians and they survived it too. So I'm kidding, of course, dear. I mean, what I mean is that they tried to throw everything at the Russians and the Russians survived it because ultimately Putin understood up front what their weapons were, what the limits of those weapons were, and set the Russian economy and the Russian banking system and whatnot up in ways that he could ensure the survival. In many ways, what you're doing with Custodia feels the exact same way. You're going through the process the right way to force legal conundrums that then force them to literally break the law. And
Well,
okay, break the
the
law, and
shall mean shall.
we'll
Right.
figure out where we are when they finally have to go. Because I think the same thing's going to happen to Gensler with XRP, with the XRP um,
You're
lawsuit.
concluding that the SEC has broken the law, and that's why they keep losing in courts. Is that what
Yeah,
you're
well,
alluding to?
clearly the SEC's. I again, my theory on my thesis on XRP, and I'll do this briefly because I know you have to go because we're over
Yeah,
time.
I was just we've gone.
I know we've gone
I
way
could go
over
with
because how
for hours with you,
yeah.
Tom. It's
So
you're
all I gotta say is
fascinating. You make me
my
think.
thesis on
Yeah.
the XRP lawsuit is the following: that Jake Clayton on his way out the door left a poison pill for Gary Gensler to deal with, and over the decision over the clarification of what XRP is,
Yeah.
and for a variety of reasons they didn't, and and it's left him in a very ugly position. It's left Gensler in a position that because he's still trying not to. They want to make sure that hard custodial assets like Bitcoin,
Mm-hmm.
like gold, and to a lesser extent silver, um, are under certain trusted partners' control.
Who's they? The
Um,
SEC?
I would say the Fed and the banking system and the banking system and who are at
So
this.
so the Black Rocks.
I think BlackRock's on the outs personally. I
Okay.
think BlackRock got a. I think BlackRock has been properly chastised for trying to destroy the United States, and their gib is that they can have a Bitcoin ETF. But
Hmm.
I do not believe that Larry Fink and Jerome Powell are on speaking terms. I and
Hmm.
to Dan,
I
I
don't know.
BlackRock up to Danielle, and she just said flat out, she's like, Fink has made zero friends on Wall Street. He has no friends left on Wall Street, and they all want his
Hmm.
head.
Hmm.
So I
Okay.
think that BlackRock is in the process of being properly chastised, and they're also the ones that are in serious trouble at 5.5% because of what they bought at 0%.
Yeah.
And because that was their superpower under the CARES Act, which was to get access to the Fed funds window, to borrow money at the Fed funds window, and then go buy equities and go buy real estate with it. And now they're upside down on a lot of those things. So I don't think.
Interesting.
I think Fink has 30. I haven't looked at BlackRock's balance sheet this quarter, but when I look at their balance sheet and I strip out all the bullshit, all of BlackRock's power rests on 33 to $40 billion worth of shareholder equity, and their
Okay.
other liabilities uh, goes up and down by $60 billion a quarter.
Oh wow. Okay. I have not
So
looked
they
at their
have
balance sheet.
zero.
So
They may have negative shareholder equity. Go look at BlackRock's
yeah,
balance sheet.
but
You know better than
okay.
I do.
So
But
yeah. Well,
they have lovely cash flow, but they have no equity.
that sounds scary. But look at Boeing's balance sheet for decades.
Mm-hmm.
That had negative equity for decades because of their pension liability.
Mm-hmm.
But they had positive cash flow, so stock price didn't reflect the
Right.
balance sheet problems.
Stock price but I think that if BlackRock, my point is that if Fink thinks that he's going to basically continue to work for extraterritorial forces like the WEF, for example, if you just like simplify the argument, then and Wall Street is and Jamie Dimon has been abundantly clear, like we're going to drill for oil and interest rates are going to be 7%. You should maybe take Dimon at his word. And he told this to Klaus Schwab directly at this year's Davos, like on CNBC. Like he was very clear about this. Like I when you that translates to me as oh, by the way, Fink, we can buy your business from you.
Interesting. Okay.
And we can take it all, and we can divvy up amongst the rest of the New York money center banks. And your business, hey, that $100 billion a year you doing, or you do that's a lot of money. That's good business for us. Who wants what? We'll take 40%. You take 20. Like, I'll put the cigar on now. You guys can't see this, but I'll put the cigar on. I'll sit back in the chair and go, hey, who wants 40% of Fink's business? I'll take, and then we just divvy it up. And
so you're saying they're the next long-term
think,
capital management.
What's that?
They're the next long-term capital management.
Yes, I do.
Okay.
And I'm not the only one
the
saying
next Bear Stearns. Okay. All right. Now, okay. So, but come back to XRP though.
Sure.
Because I took you off on a tangent about Gensler. Clayton left him with a poison pill.
They left him with a poison pill because that lawsuit is such that, and remind me on this. Like I have to get through my arguments on this, but this is a definitional lawsuit ultimately that they can't. They want to call it a security, but they can't call it a security clearly. And so, but that left Gensler, who was supposed to. I see Gensler as a Davos agent. I see him as somebody brought into the administration to.
So Elizabeth Warren is a Davos agent?
Oh, absolutely.
Okay.
Oh, absolutely.
Okay, keep going. Sorry,
absolutely. She'll work
keep
for
going.
the United States. She's never worked for the United States, that bitch. I'm sorry. I hate Elizabeth Warren with a purple passion. Think of her now. Just wait until 6 months from now when the campaign gets they're all, everybody up. Like the entire Biden administration doesn't work for the United States. I consider all of these people traitors and jokers. And I have plenty of circumstantial evidence of this, how they act under certain, from a certain point of view. You can clearly see what their next move is going to be whenever something else happens. When a new rate hike comes or a new statement comes from the Fed, and then they do something else. It always works this way. When markets get to a particular point, something happens. Yellen goes to China. This is, the way the debt ceiling was resolved in June was clearly like Yellen doing her best to sell out the United States. She had no business draining the TGA account with the way she did.
Oh, well,
None.
yeah.
She did it on
there
purpose.
Been a couple
she
of
did
those.
it on purpose. She was bitching about the
and
TGA.
Also the Strategic Oil Reserve.
Yeah, she was bitching about the TGA going bankrupt the day after the election, and the Republicans secured the majority in the House. She started complaining. Like, she was setting that narrative hook for 6 months. And McCarthy played right into it because that was his job, and blah, 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 blah. Same thing with McCarthy wanting so the way these people always act will always tell you who their allegiances are, who they really work for. And Gensler, to me, has done everything he's supposed to do to stop the official. We don't, in no way, manner, shape, or form, does Europe and or Davos want the United States to have a settled crypto policy? Because if we have settled crypto regulation and policy, then it takes the most powerful financial institutions in the world and gives them certainty. They want to always create maximal uncertainty on our markets to retard investment into those markets in the United States. That is their goal.
I can see that as a potential
their goal. That's
reason, right? Because they want to keep the euro supported.
To keep capital flight from happening in Europe.
Yeah.
Keep crypto regulation in the United States up in the air for as long as possible.
Right. And right now they're getting capital flow into Europe in the crypto space. Right. Because so many people are moving there. Yeah. Andreessen Horowitz just opened a UK office. Right.
And the UK and Europe are different things.
I know they're different. I was just thinking that as I said that. There's definitely some overlap.
I just want to make sure.
Right. No, I get it. They're not, their interests are not aligned. But if you're going to put an office in Europe, broadly speaking, you're going to put it in London. Yeah,
you're going to put it in City of London. And actually, that tells me that City of London is actually. It tells me a lot of things about City of London. Actually, that it tells me that the fight between Brussels and City of London is real, more real than it's the piece of information I didn't have.
Why? Because Andreessen Horowitz just announced it's opening a UK office. Why? Explain that. And they put Brian Quintenz in. He announced he's no longer just an advisor. He's now head of policy there.
In the UK.
Former CFTC. I don't know if he's Andreessen Horowitz mothership or UK, but it was all the announcement that I saw. I hope I'm not getting this wrong. Right. Is that those two things were announced together. I assume they're connected, but I don't know for sure.
My point is that if anything pro Bitcoin that comes out of that goes into London, and there's nothing pro Bitcoin coming out of Europe proper under Lagarde.
Oh, nothing. I see. Right. So the fact that there's pro Bitcoin coming into London.
Yes. Right. That makes sense to me. So, and then, so from that perspective, if money is, I don't know, watching the money flow and tracking the IP addresses of movement and Bitcoin, what Bitcoin's flowing is it's flowing into Europe. It's flowing into Europe because people are rightly scared that aren't going to be able to get their money out of Europe when it all starts to collapse. Like that's what I would be watching for at this point as a backdoor way to get out from underneath the system. And I know that Lagarde is doing everything imaginable to cut all those off at the knees. And again, it's the same thing. They're all worried about capital flight. They're all absolutely like scared to death about capital flow.
Well, that's what central bankers are worried about across the board. The US historically hasn't had to worry about that,
Right.
but certainly the rest of the world has. Yeah.
I haven't even gotten into, we haven't even gotten into,
Wow.
we haven't even gotten into Japan and their role in this and what happens when they end yield curve control and all the, what's just happening. But
it
yeah,
is happening.
So, yes,
and
is.
it's pretty wild, isn't it?
And it's a good thing. And it's right on schedule, right as I expected it to happen, as a matter of fact. Scarily enough.
Well, okay. Give the elevator speech version of that.
Oh, sure.
You can't bring it up and have us end here.
You and I have.
Why is it on schedule? Yeah.
So, it's really simple. Last fall, the euro bottoms at 95.6 cents. We get the snap. We start to get a snapback rally, and then Kuroda widens the target as his last act before he leaves. Now, here's the interesting one.
Yeah.
So. The yen is the ultimate carry currency. The yen is now sitting at nearly 150, and the yen and the yield curve control has been helping Europe run a carry trade in order to support the euro for years, right?
Yeah.
So, but if they start raising interest rates, if they start allowing the long end of the curve in Japan to run hot, and credit spreads between JGBs and bunds start to collapse, then those trades have to unwind.
Yes.
Right. Okay. So Kuroda's last act as BOJ chairman is to widen the band thing, and then his lieutenant Kishida in Japan. This is a seniority based society. Steps aside and says, "For the good of Japan, I am not going to take over." Because I was the architect of yield curve control in QE, and we may need fresh blood. Ueda takes over, and the first thing he basically says is, "Oh yeah, we're going to get rid of yield curve control, just not
chuck it out the window." Yeah,
it's going, but we're going to do it by degrees. And he's now allowed, and he's for years I always likened it this way: between the BOJ, the Fed, and Lagarde at the ECB, it's like a big game of Texas Hold'em. The Fed, Fed for years underplayed their aces in the hole, and folded at the first sign that somebody overbets them, and even though they fought their set or whatever. Like if you know Texas Hold'em as well, the Fed's holding the nuts, and then they get raised a little bit and they fold, and that's LIBOR blowing out, right?
In 2008,
right? The BOJ, the ECB gets dealt cards off the bottom of the deck in order to win hands that they shouldn't win, and the BOJ plays with their whole cards face up. Ueda just turned their whole cards face down by saying,
"Got it.
Hey, we're not going to tell you exactly what we're going to do anymore."
I understand that. Yeah. No.
So looking at it from that perspective, who's the loser at this table? If Powell now plays his aces properly and plays position properly and actually plays like even a semi-professional friggin' poker player who should win a pot every once in a while. Like, for Christ's sake, under Yellen and Bernanke, they literally played they were the fish at the table, and everybody knew it. That's the way that's my elevator.
And thus the U.S. got kicked around, and now
we got zero bound interest rates. We got every time the Fed tried to tighten, they had to pivot beforehand. Blah 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 blah. Because the euro dollar, because Jeff Snyder was correct for years that the offshore dollar markets were the
tail wagging the dog
of monetary policy. That is no longer the case, and he and I can fundamentally disagree on that. So.
Well, I mean, I guess the question is, do we have the data to determine that? Right. I mean, LIBOR went to SOFR, which is a huge change, right? So we've got control now. It's not the London banks that have control over interest rates. Mm-hmm. And for those who haven't followed you on this, you were the one who made me realize the importance of that. I knew it was happening, but I didn't fully understand. I thought they were just trying to get bank credit out of interest rates. No, they're actually bringing the control of US dollar offshore interest rates out of London and bringing it back onshore into the US. Mm-hmm. So yes, it's now not a bank credit determination, right? Back in 2008, when LIBOR spreads blew out, right, and I was working on the trading floor at Morgan Stanley, right, we had bank balance sheet problems influencing the whole U.S. economy. And it was back then, there was, I think, only one or maybe two U.S. banks in the LIBOR panel, right? It was non-U.S. banks credit problems that were blowing back onshore into the U.S., which is why the Fed knew that it had to get control of LIBOR. And it took them, 15 years almost to do it, but they did.
Look, SOFR was on the drawing board back during the Obama administration, and Geithner said, and Bernanke and Yellen said no to it for years.
Well, because you're saying that the Davos crowd didn't want it because they wanted to keep control over that in London. Yeah, and that's a reasonable argument. Yeah.
It makes sense. Yeah. It makes sense. So today we're staring at a different situation. I think we do have the data on this because everybody wanted the Fed to pivot at 1%. And then, look, we're at 5.5%, and nothing's "quote unquote" broken yet. Yeah, things are breaking, but we're at 5.5%, and we've been at 5. We've been at over 5% for 2023.
You made the point that, and we talked about this on our last podcast, that yes, you can taper a Ponzi if you're the biggest Ponzi. So, and that's a mind blowing concept. There will be a point at which you cannot taper that Ponzi. Do you agree with that?
Yeah, of course. And at that point, the Fed will have to pivot, and they'll have to stop, "quote unquote," shrinking their balance sheet. But look, the Fed is never going back to an $800 billion balance sheet. Like, anybody who thinks that I'm arguing,
that's been clear.
It's insane. There's no way I'm thinking that. But what I am thinking is that
it could be 80 trillion before this is over. I'm dead serious, right? If you look at non-financial sector debt that would have to potentially be monetized in order to support the banking system, I mean, our non-financial sector debt is now north of 95 trillion last I looked.
Right.
These are huge numbers.
These are insane numbers. And I don't know what, there's two ways of dealing with the problem. We can either take it all onto the Fed's balance sheet, or
correct. That's what I'm talking about.
Or we could cut spending, remonetize gold, and throw it down on the yield curve with a redemption clause, and create the investment necessary in U.S. Treasuries at low dollar liabilities, but future gold liabilities, that would then allow us to get through the demographic bulge of the baby boomers, and until we get into the smaller generations like ours, right? Because I think we're roughly the same. We're in the
I'm a Gen Xer. Yeah,
I'm 55. Yeah. Like I'm high Gen X.
Okay, 54. So we're close. Yeah, exactly.
Right there.
Yeah,
I would never ask a woman boomers. Her age. So
no, I don't mind. We're not boomers, right?
We are not boomers. And they are scared to death that we Gen Xers, who understand all these dynamics, will get power and do what needs to be done. And you can see what Matt Gaetz pulled last week was a perfect. Again, it's like it's a fork in chess. You can choose maintain the illusion that there isn't a uniparty in Washington D.C., or open up the GOP to a massive primary challenge, which is going to change the future of the GOP in Congress, because we're going to primary out 50 or 60 terrible rhinos and globalists. And we know who they are now.
Well, and I will. That is so interesting. Without getting political here, I am really amazed at how much exactly what you just said is correct. We now know who they are. They really split. The Republicans really split, and we're also seeing it with the neocons in both political parties. Absolutely. Really split over what happened over the weekend in Israel. Right. I mean, to your point, these are forks, and people who you may have thought might have been on the same page before. It's now clear that they're not. But maybe we can end by bringing back the point about Bitcoin. Absolutely. And how that is going to play into this absolute crazy 2024 presidential election, where I have no idea how this is going to go. We talked about the uniparty. It is so fascinating to me what Kennedy did yesterday. RFK Jr. announced that he's doing an independent run. Now, it is, I've tweeted about this. I have talked to him. I have talked to his campaign manager, Dennis Kucinich. It is public that we connected at a couple of different places. And I have also shared publicly that multiple presidential campaigns have talked to me about Bitcoin. You can probably guess who they've been, and it's more than two, right? So, I mean, there are people who sense that this could be an issue. It's not the candidates at the top of the polls in either party right now. They're both very clearly very anti-Bitcoin. At least Trump has been in the past.
Yes, he has.
It came out interestingly that he owns Ethereum, and he's been involved with NFTs, but I think that might be as much as he's just looking, at a way to monetize his brand, than necessarily being committed to it, right? But he was pretty anti-Bitcoin, and Mnuchin was anti-Bitcoin during his administration. So of the secondary candidates, right, is what I'm talking about. And the reason I brought up RFK is it's so interesting what he did, because I had an opportunity to ask not him but somebody very high up in his group, do you guys have a plan? Do you guys have a prayer? Because of the following: the Democrats have the super delegate structure. And the super delegate structure means that the Democratic primary voters' votes don't matter, because the super delegate structure has super voting. And if the super delegates all decide that they want one person to be the nominee, they're going to have that person be the nominee regardless of whether somebody else wins the primaries. That is not true in the Republicans right now. Okay, so it is more of an open, primary voters really do have a say in the Republicans, but not in the Democrats. Right. Okay, so I'm not surprised to see what Kennedy did, because I asked, do you have a plan? And the answer was yes. And I did not follow up because I knew they were not going to tell me. Right. But I guess the plan was, you're not going to be able to win the super delegates, so may as well just leave and run as an independent. And I think it's a very interesting signpost.
Yeah, no, it is. And the bigger question is, will he, how much of an infrastructure does he have in order to pay for ballot access? Because ballot access is the big problem. Okay.
Yeah.
I've heard, the potential of him, according to the libertarians, he's
definitely been doing that.
Yeah. And the other side would be the Greens. I haven't caught up with how many, just based on their ballot access status. I haven't checked to see what the Greens ballot access status is.
I have no idea.
The libertarians pride themselves on holding on to as many states as possible so that they don't have to spend money on ballot access, which is smart. It's about all they have the money for, mind you, because they've been neutered by rhinos in the GOP. But that's a different discussion for a different day. My question is, whether he's acceptable to the libertarians, especially with the Mises Caucus in power, I don't know. But what I'll say is this: if the Greens have 30 plus states ballot access, I could see Kennedy with his there's two big policy problems libertarian wise is going to be his environmental policy and his gun policy, which he's a better fit for the Greens than he is if he wants to buy ballot access to a party. If he just wants to run independent and do the Ross Perot thing, that's fine with me as well. If he thinks he can run that way, that works for me. The big worry for the Democrats is they're hoping that he's John Anderson, but the reality is that he could easily be Ross Perot.
Well, and it's so interesting because I went to law school with Chris Lehane. You can look up who Chris Lehane is. He and I reconnected at the MainNet conference a couple of weeks ago. Hadn't talked to him in years. If you look up his background, you'll see he was the electioneer who helped get Clinton elected. And he was involved in Obama's campaign. This is a genius electioneer. Okay. And there have been, books written about what he did. And he made the point at MainNet on his panel that 61% of pro-crypto voters voted for Biden. And they're horrified at what happened during the Biden administration to crypto. Okay. And he also is making the point that there is a big enough block here to swing the close elections. When Chris Lehane says these things, I listen. Okay? Right.
Wow.
And I think he's right. And he's now working for Hahn Ventures. He's in the industry. Okay. So, and there's a lot of money in the crypto space. It's public information that a lot of the Silicon Valley crypto folks have been spending a lot of time with Kennedy. I'm not saying that they're all going Kennedy, and I'm staying neutral. Very clearly, not endorsing anyone. I'll always talk to people on both sides of the aisle about Bitcoin, and generally pro crypto, although I'm mostly a Bitcoiner. But long story short, it's going to become an election issue. That's my point.
No, I know, right? And that's a great point. I'm really glad you brought that up because I hadn't been thinking about it in those terms. But
because we're going to be in a bull market during the presidential election, right?
and we're going to have a change.
Past this prologue. Yeah,
we're going to have a changeover in the House again. If Matt Gaetz's little revolution bears any fruit, right, and we wind up with a lot of primaries, a lot of olds and old guard being primaried out, or having coronaries and just dying off because they're all 90.
Yeah.
Which, I mean, I'm at the point now where I think Pelosi just to keep running just so that she can get the sympathy vote when she like has a coronary on the House floor one day, and we can have Nancy Pelosi Appreciation Day and turn it into a national holiday or something. I'm at that point where it's we've so
Well,
entered
that's what
clown
Dianne
world.
Feinstein did.
Yeah,
Yeah.
I'm
Yeah.
basically so.
Yeah.
What I see at this point is that becomes a very interesting thing. If we wind up with a real changeover in the 2024 election cycle at the congressional level, presidential election is going to
Mhm.
be a complete and utter shit show, and to the
Yeah.
point where I don't
Yeah.
think I think
Grab the popcorn.
I'm
Yeah.
going with Martin Armstrong's argument that no one is going to accept the results of the election because they can't afford to, from a
Hmm.
again from a geopolitical perspective, again
Hmm.
or based on the factions that these people represent, right? But at the congressional level, that could be very interesting, and Bitcoin could be a centerpiece easily in dozens, if not 100 House races, and
Could be. Right. And
that
it
makes
skews
it
young.
that could be the political revolution we've been waiting for.
Yeah. And again, don't take it from me. I'm not the expert in this. I'm listening to somebody who's got the receipts from having electioneered previously incredibly successfully.
Right.
Yeah.
No, I'm and again, I'm taking that argument very seriously, and then saying,
Yeah.
this is the mechanism by which we get there,
Right.
and then once it becomes very obvious to everybody that that's what's going to happen, then that also bodes well for crypto regulation post 2024 and that whole policy uncertainty thing that we've been dealing with, which is clearly another one of these time buying Davos rearguard actions that or like the Brits, Davos. I mean, on certain things, they're all aligned on this shit. Like, it's crazy, and I hate to like put one. But at this point, we now have at least three different factions. We got the U.S. banking sector, we've got the British Crown, and we've got Davos. They're all like fighting amongst themselves for control of the United States. Like, and it's crazy what's going on, and it's almost an entire podcast just to map it at this point.
I will listen to that when you do that podcast.
When I do that one, right?
And Bitcoin's right in the middle of
and
it.
Bitcoin is and Bitcoin sits at the center of all of these things, along with
it doesn't revolve. I mean, it's a bit player, right? At this point, it's a bit player, right? Because it's still small. But those of us who and when you talk about the Fed, your prediction that the left is going to make the Fed a political issue, and they're going to try to. I mean, we've seen this in history before, multiple times, where the Fed became a political issue, right, even all the way back to its creation in presidential elections. And most folks probably would have thought that it was the right that was going to be bringing it. Your point is it's the left that's going to be bringing it, right? Which again, it's still I'm still trying to figure out how to put in the context.
That one, Elizabeth Warren will tell you everything you need to know about Bitcoin. And
right, but why were they doing her bidding in denying the applicants like Custodia?
Again, because she works for Davos, and Davos doesn't want Bitcoin, and we don't want it. And the Fed. Why would the Fed do this? It comes down to, unless they have other plans where they want to control Bitcoin, and they don't have, and Custodia just sits outside of what they think is their control. Even though you're offering to them, let me be regulated by you.
Correct.
Be your system.
We begged to be regulated by them.
I don't know. Unless they still harbor fantasies that they're going to be able to regulate Bitcoin and then control it in order to kill it. And if they still harbor those
fantasies, they tried.
I know. And a year from now, you and I be doing a podcast where we go, they finally gave up their illusions.
Well, maybe this is a great place to end. Oops, sure. Sorry, I just whacked my phone with my. I always use a cord because the sound's better. Somebody actually on Twitter was like, God bless Caitlin, she's old school and still uses,
right.
Instead of like you've done with a proper setup or with the earplugs. But long story short, is better sound. But of course I whack it every now and then when I'm doing the arm thing. Mm-hmm. But it'll be interesting to see how it plays out when you and I get together. Again, 6-9 months down the road. And I'll leave with this thought. That door is already cracked open. If you read the 86-page, very unusual denial that the Fed published for its reason to deny Custodia, which by the way, the longest ever Fed denial in Fed history. Prior to that was 3 pages. Okay, ours was 86. Okay.
Again, that's telling you everything you need to know. There's something about this that they had to. It's like it's like the SCOTUS, coming down wrong on like an Obamacare. Like we were told this has to happen for these reasons. Come up with a reason, write it up, and give me 85 pages worth of equivocation. But and no one believes the argument, but it is what it is.
Well, what's so interesting is the universe responded. Nobody believed it, right? American Banker named me one of the top 3 innovators in banking. This is the paper of record of the traditional banking industry. Okay, so even they didn't believe it, right? And then my university came forward and named me distinguished alumni. And in Wyoming, I get it, right? Because a lot of people are like, "Yeah, you're the one who's suing the Fed. Go get them," right? In Wyoming, I get that's
right.
There's a zeitgeist for that, but then Benzinga just named me one of the top people in finance, right? So the world clearly responded because they understood. They didn't believe what the Fed said. Okay, but I will say the door has been cracked open, and in August the Fed announced a novel activities supervision program. After saying hell no in January, the door's been cracked open. So I think it's already, when we get back together in 6 or 9 months, that'll be one of the places we should pick back up. What happened with that? Did it become anything? Was that a signpost? At this point, we don't know. No, well, I mean, I assume that it is, although I will say one of the people that we've talked to who is a Fed lifer who is retired, who's advising us, pointed out a couple of things about that. It was very unusual because usually they will have names of examiners that internal people can contact with questions about the guidance. And also they will usually have the actual supervisory manual updated with new guidance and point to the pages in the supervisory manual. And they did neither of those things, which suggests that that was a rushed thing, and no one knows what it means at this point. So we'll find out.
We will find out, Caitlin.
Okay, Tom.
We'll end it here, love. And all I want to say is, God's bless you for your enthusiasm and your energy on all of this. It's just fascinating and it's lovely, and I absolutely, it's infectious, and I really appreciate it, and I appreciate both the talk and the challenge and everything else, because it's always fun. And,
look, we've been playing a long game here, and I think you're playing a long game too. And we are doing something very meaningful. This is a passion project for me personally, as somebody who truly does not want either the traditional financial system to be hurt by Bitcoin and crypto, or Bitcoin and crypto to be hurt by the traditional financial system. And we've seen both of those things happen last year, precisely because the regulators didn't understand that these connections were going to be sources of problems. And there is one way to do this correctly, I believe, and it's exactly the way that Custodia has set this up. And it'll be interesting to see, when and if the regulators in Washington, D.C. Recognize that doing Elizabeth Warren's bidding is not in their interest, and actually, working with somebody who is where the puck was always going to go, because somebody was playing a very long game here, and I think, as a company, our investment in getting that bank charter, building the bank infrastructure, it is not easy to start a bank in the United States. You have to have a particular type of IT system. You have to have a particular type of risk management. You have to have bank level BSA compliance. All of those things take time to build. And then on top of that, we built a very particular Bitcoin custody system that I believe is going to be valued by the users, because they will understand it comes as close to a not your keys, not your coins ethos of Satoshi. And that is unique. We survived the bazooka. We're backed by a lot of people who really want to see us succeed. And I'm very grateful to everyone, especially our investors, our team, and our customers and folks who are interested. If you want to look at Custodia, it's custodiabank.com. We are in 28 states right now. You can look at that on our website to see whether we're licensed to do business in your state. But we are off to the races, and having great fun, being in the position that we're in as our competitors are dropping like flies around us, and we survived it. We're in this very, very interesting position with both that lawsuit for the master account, and we haven't talked about this yet, but Custodia was granted the patent for a US dollar stablecoin issued by a bank in July 2022, and we own that patent. And so, depending upon how the stablecoin market goes, right now none of them are issued by banks. Right. But this whole concept of a tokenized bank deposit, that is something that Custodia owns the patent for. So it remains to be seen how that all plays out. And I think next time you and I get together, we're going to have a lot to talk about, because just like in the ensuing period of time since we last got together, a lot changed. Yes. And it frankly went Custodia's way.
Yeah, and more power to you, frankly, and really happy that to have that kind of update. Honestly, because it's been a real worry of mine that, look, I've been watching The Empire Strikes Back against Bitcoin for years, and it gets wearying to watch it happen. And, and sometimes it's hard to remind yourself that sometimes you are winning. And just by virtue of the fact that you survive is actually, winning. And that's a metaphor for a lot of vectors and a lot of idioms in this particular fight, and it comes from a variety of different it comes from a variety of different perspectives. And so, take the wins when you can get them, back the right people when you can, and be honest in your analysis as best as possible. It's all we can really do. And if I don't swallow wrong, I won't end this podcast by trying to choke on air. Okay. That would be great.
I love it.
That was not me taking a drag off my last stogie. So, all right, Caitlin, great to see you again. We're going to do the thing. We'll get back together in a few months, and you have a wonderful day, and we'll
you
talk
too. Thanks, Tom. Take care.
Well, that'll about wrap it up for episode 156 of the Gold, Ghosts, and Guns podcast. I want to really thank Caitlin Long for the immense amount of time she took. We had originally planned on going about an hour, and then, well, neither of us could really shut up. So we had a great time. I had a great talk with her, and look forward to doing it again in the future. So as always, you can follow my work over at my blog over at tomluongo.me. You can follow me on Twitter at TFL1728. And you can sign up on Patreon at patreon.com/Gold, Goats, and Guns, where you can sign up for either the monthly newsletter and or the twice weekly market reports and private blogs that come out once or twice a week as well, where I go over the state of capital markets, the gold, silver, Bitcoin, all the things that matter to the things that matter to everything you hear on this podcast. So there we go. That said, I'll be back soon. You guys be well. You take care. We'll talk soon. Keep your stick on the ice.